Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. And clearly, Monday blues are creeping in for the markets. Now, when I'm looking at the Nifty as of now, nearing that 19,400 level, very close to those levels as well.
Absolutely, Vinny. A weak footing for the markets. At least we've begun the truncated week on a very weak footing when it comes to the benchmark indices, even the broader markets, where the cut is much sharper, much deeper, coming in for the broader markets in today's trading session. There you go, 2% downtick coming in for mid-cap index. Small-cap index also actually underperforming today, 2.5% downtick coming in for the small-cap index. Talking about Nifty Bank, that one also is moving in tandem with what the rest of the market is doing. If you look at the advanced decline ratio, very much tilted in the favor of the declines. In fact, that ratio has actually worsened as actually hours have passed by. If you look at the stocks on the Nifty, only 6 stocks on the Nifty right now holding into the positive territory, with ICICI Bank being the top gainer on the Nifty. And if you can see the gains coming in for ICICI Bank, just 0.9%. So none of the counters are gaining in excess of 1% when it comes to the Nifty at this point in time. Talking about the list of losers, and there are a lot of them. So you have Adani Enterprises, that is the top loser on the Nifty, followed by Tech, LTI Mindtree, Adani Ports, Hindalco, NTPC, Wipro, and the list just keeps going on. Talking about the sectoral indices, all the sectors are in the negative territory. So yes, we've begun the week on a pretty weak footing, Vinny.
Absolutely, begun the week on a very weak footing, and it'll be interesting to see how this actually truncated week actually ends, because 19,400 important levels that we're keeping an eye out on. But let's move on, and the government now is including the Ministry of Finance, Commerce and Transport Ministry is likely to make a decision today regarding the closure of the Metals and Minerals Trading Corporation of India, that's MMTC, and State Trading Corporation. And Sumit Chaturvedi joining in with us to give us more details on that. Sumit?
There's a high-level meeting that is going to take stock of STC and MMTC. The discussion is likely to be on the closure of these two companies. Well, they were in last year, they were denotified as canalizing agencies. MMTC, well, it was used to canalize export and import of metals, while STC was used to canalize export and import of commodities, essential commodities, including sometimes. But government, under the new policy, is of the view that these entities should not be in the sector where they are not supposed to be, or they can likely suffer losses as well. That is why there's a need to close them. So the call regarding this is to be taken. Let's look at data. Well, STC in FY23 it had zero revenue, and in FY22 also it had zero revenue. From FY14 to FY22 it was in losses, but in FY23 it had profit because of the rental income. Come to MMTC, and here revenue was around 3,500 crore in FY23. It was a profitable company that time, and in FY23 the profit is of 1,072 crore rupees against the loss of 270 crore rupees. So that is the performance of these entities. But coming to the meeting, and the meeting will comprise of officials from Finance Ministry, Commerce Ministry and Road and Transport Ministry. But this is something which is clearly on the cards of the government.
Okay, thank you so much for that, Sumit. But on that note, let's get started with all those individual movers in trade, either on the back of news flows or on the back of technicals. And on the technicals, we're joined by Kunal Rambhia, while from the research team, we have Harsh as well as Ankita joining with us. A very good afternoon to all three of you all as well. And I'm going to be starting with the first stock that's in focus today, and that is BSE. I think one of those few stocks today that is trading in the green as well. Now, we have a couple of brokerage notes that have come in. One is from IIFL, where they are actually upgrading the stock's target price to rupees 2,000 per share. They said that, BSE was incurring loss on its equity derivative volumes. After this, the increase in tariffs, they estimate a 45 to 50% net contribution coming in. Obviously, in the range of the table that is there actually for the transactions, when you look at it, it's going to be in the range in tariff increase of around 4 times to 7.5 times hike in the transaction. This upward revision in transactions is going to be taking place from the 1st of November 2023 as well. And obviously the changing in fee structure from other current flat transaction charges to the slab based on transaction charges is something that is keeping the stock abuzz as well. Let's not forget BSE has been buzzing in trade for a while now, and the revised EPS by IIFL is at FY24 is at 12%, I beg your pardon, and for FY25 is at 34%. So on the back of bullish commentary that is coming from IIFL as well as Invesco also, who's revised the target price to 2,140 rupees per share from previous target price of 540 rupees per share. Clearly, this hike and change in tariffs is keeping the stock up as today.
All right, moving on, let's talk about IAs Labs. That one came out with its numbers on Friday during market hours. The stock did see a smart recovery, but brokerages have come out with their note on IAs Labs today, and because of that, the stock has actually seen a downtick of as much as 10%. Last time I checked, it was the biggest intraday fall since at least May. The stock has hit its lowest level since August 3rd. The company, remember, posted about approximately 84% drop in their net profit on a year-on-year basis. The revenue from operations was down about 22.3%. Jefferies has said that IAs Labs EBITDA missed estimates on lower sales, and they're seeing near-term margin headwinds on muted business growth and slow ramp-up of the new projects. While analysts at various other brokerage houses are expecting revenue contribution from IAs Labs synthesis business to drop to about 18% in FY26 from 35% in FY23, while Motilal Oswal sees IAs Labs earnings declining 36% on a year-on-year basis on price erosion and higher inventory. No doubt on Friday the stock did make a recovery, but definitely the brokerages are not too enthused about the earnings coming in for IAs Labs. On back of that, the stock is down now 9% as we speak.
Let's move on, talk about Balkrishna Industries on the technicals. And Kunal, when you look at it today, yes, the stock opened up in the red but recovered from the day's lowest point as of now. Last 1 month, a bit subdued. What is the indication now you're picking up in terms of technicals?
Very good afternoon to everyone. So if you look at the overall trend from April so far, the counter is making a clear higher top, higher bottom, and as you rightly said, in this entire month, this counter remains sideways. The strong support on the chart is 2500, and today's low was almost near to that level itself. So keeping that in mind, one can initiate a buy, keep the stop loss little lower than 2500, and the first target on this can be 2700, which is the previous swing high, and above that we can expect the levels of 2900 in the time to come.
All right, that's Balkrishna Industries for you. But Harsh, let's talk about RBL Bank, and why is this one in focus today?
Well, earnings, Cheryl, it's the season of earnings, and RBL Bank, no different, declared its results on Saturday. Overall, it looked like a good set of numbers. You're looking at net interest income, which was up roughly 26% year over year, 4% sequentially. You're also seeing operating profit, which was up 43% year over year. So clearly, you're seeing a lower OPEX this time around on RBL Bank. Also, we saw provisions come in at 640 crore versus the 266 crore. Now, here's where the real differential has started to creep up versus last quarter, where it's a negative, but not really quite a negative, because what has happened in RBL Bank is they've provided for a 300 crore one-off. They have received 300 crores in income tax refunds, which they've utilized fully towards building up provision buffers. So that is actually in some sense a positive. And profit after tax is at 294 crores, which is a 46% bump up year over year, but has come in flat sequentially. So that ROA of 1% remains as is. We spoke with the management. They're expecting ROAs of 1.2% at exit FY24, which is by Q4. So positive on that count, decent set of numbers, largely in line with expectations, but the stock is down 5% in trade.
Okay, let's move on and then talk about Britannia on the charts. And Kunal, this one has been quite subdued in trade on a YTD performance. When you look at it, just 6% returns. Should we expect good days coming in for Britannia now on?
So the interesting observation on this chart is that since August 2023 so far, this counter has given almost 5 trades of 3% each. Now, if you look at the zone, it's going to be 4,500 on the lower side, and on the higher side, we can expect 46.25, 46.30 kind of resistance. So keep trading in this zone rather than waiting for the whole long position. We can just keep accumulating this counter near 4,500, keep the stop loss of 44.70, and on the higher side, 46.25 can be the good level. So right now, it's trading near to 45.75. So keep these two levels in mind and keep trading on this zone to make 3.5% on a regular basis till the time it gives the breakout.
All right, so that's Britannia for you. Ankita, let's talk about Paytm. Healthy numbers, but the stock is really taking a knock into this trading session.
That's correct, Cheryl. Despite posting an inline set of numbers for Paytm, the stock is down almost 7.5% in trade at today's lowest point, and it is recovering from there. But we do see, I guess, profit booking coming in there because, the stock has already run up almost 80% year to date, and probably, there's some profit booking going on there. But let's talk about the results then. Paytm posted a narrower net loss of 292 crores in the second quarter. Now the total revenue grew approximately 32% on a year-on-year basis and 8% on a sequential basis, which was supported by a healthy growth in the GMV disbursements and addition of subscription devices. And also we saw a brokerage note come out by CLSA on Paytm today, and they are maintaining a buy on the counter, and they've hiked the target price to 1,200 from 1,050 rupees per share. They feel that the GMV growth is good, and they're banking on new soundbox variations. That's something that we need to watch out for. Also in the lending space, they have added a new partner, and the take rate is absolutely stable according to them, and the increase in the EBITDA, they have increased the EBITDA estimates by 12% to 13% on the back of stronger GMV growth, and on the back of that, CLSA is also maintaining a buy on the counter. But as of now, the stock is knocked out in trade, down 7%.
All right, that's Paytm for you, but let's talk about a rare bright spot in today's market, and that is IAs Labs. And the reason why this particular counter has managed to snap a 3-day losing streak is because Nomura has come out with their note on the counter where they've upgraded the stock to a buy rating, and on the back of that, you saw the stock actually hit a 14-month high on an intraday basis. Nomura has upgraded the stock to a buy rating from neutral rating earlier, and they've increased the target price by 191 rupees per share to about 1,133 rupees per share. Remember, on Saturday, the company got an establishment inspection report from the US FDA classifying the company's active pharmaceutical ingredient, that's API manufacturing facility at Ratlam, as a voluntary action indicated. The US FDA outcome is a positive surprise, is what Nomura actually mentioned. They said that the clearance of the Ratlam site indicates material progress on the regulatory front. The company also said that the Ratlam plant is a crucial site for the company and also was one of the most troubled facility from the regulatory perspective and has been under import alert since January 2015. While Nomura is saying that winning back the regulator's trust is a positive that positions IPCA to rebuild its US business from here on, and therefore they've gone ahead, given a thumbs up, in fact upgraded the stock to a buy, also gone ahead and upgraded the target as well.
Okay, then keeping it with the pharma space, and we have Aurobindo Pharma, Kunal, that you've picked out for us. When you look at it in terms of 6-month move, yes, a good run up, 47% almost returns in the last 6 months. But specifically zooming into the last 1 month, it's remained quite range bound in this last 1 month. 850 to 900 levels is where it's remained at. Aurobindo Pharma on the chart, should we expect the run up to again start coming out after this subdued 1 month?
So exactly, you mentioned my levels perfectly. The support being 850 and the trend is absolutely strong. It's been a 1.5 month sideways consolidations, 850 being the stop loss, one can initiate a buy. I think this trend might just continue. It was a time correction which we witnessed so far. So initiating a buy with the stop loss of 850 and the first target being 920, 925, and above that we can expect the levels till 975.
All right, so that's the take coming in on Aurobindo Pharma. But on that note, we'll slip into a break on this edition of Market Fatafat. When we come back, we will discuss some more stocks, so don't go anywhere. Special programming for you all at 2 p.m. as well, so don't miss that. But before that, Harsh, let's talk about KFin and spectacular numbers, is it?
Well, yes, stellar set from KFin. In fact, the stock was also up and buzzing, not anymore though. Surprisingly, lost all of those early gains that it made in the day. But let me take you to the numbers. 209 crore is where the revenue came in at, which is a solid 16% higher year on year as well as quarter on quarter as well, 15% uptick. Especially that quarter on quarter number looking extremely solid. We're also looking at EBITDA, which came in at 937 crore versus the 704 crore number in Q1. Similar number which we saw even in Q2 of FY23. So clearly we are seeing good traction there as well. 32% rise in margins, by 32% rise in EBITDA, I beg your pardon. Margins came in at 44.8% versus the 39.4% number, so 5% plus margin improvement on a year-on-year basis. Even sequentially we saw a 6% uptick in margins. So definitely a solid number there as well. And profit after tax finally came in at 614 crore versus the 479 crore number same time last year. So a good 29% jump even when it comes to profit after tax. Strong set coming in from KFin, but the stock languishing largely in line with markets, down 0.9%.
Let's move on and talk about Havells then on the technicals. And Kunal, when you look at it, yes, last week we had the numbers. The stock performed quite weak. Performance was quite weak in the last 5 days, and especially in the last 1 month as well. It's been nothing exciting. Havells now on the charts. What are your expectations?
So yes, we saw a sharp decline, and that decline was almost of 13% from its recent highs. But the interesting observation on the chart is that now again it is reached back to those May and June levels where the consolidation had happened multiple times, and there were almost 4 bottoms made near 1275 levels. In fact, in today's trade, it made a low of 1277, and on the chart it is making doji formation, which confirms the the indecisiveness of the market at the present level. So if it consolidates near present levels, I think 1275 can be a good stop loss for anyone who wants to go long on the counter, and the bounce can show us the levels of around 1400 to 1425.
Kita, let's talk about SAMIL. That's the other counter that is in focus in today's trading session, and what's the reason behind it?
Yeah, so a couple of news flow coming in there for Samvardhana. I mean, the stock is, down in trade, but I guess that's the general. It's ticked up in the green now, but it was down a good 1% in trade, but it has picked up momentum. But there are a couple of announcements there. Then announced a series of acquisitions to strengthen in aerospace, health, and the medical businesses. Now they have entered into an agreement to acquire 100% stake in a French company which is called CP Aerotopco SAS. The purchase consideration is going to be for around 35 million euros, and they have also approved the acquisition of 73% stake in the Arlic Private Limited. Also 100% stake in Samvardhana Motherson adhesives from Motherson Auto will be there for a cash consideration of 21 crore rupees, and couple of acquisitions then, and on the back of this news flow, the stock is going to be in focus. Right now, just gaining momentum, is up 0.4% in trade.
Okay, surely keeping an eye out on that stock. But let's move on, talk about Just Dial as well. They came out with their numbers. What we saw is early morning we saw gains coming in, but after that they have given up all those gains as of now with the markets. Look at it, quite subdued in trade, down 0.7%. And this is despite the surge that we saw coming in the net profits of the company of around 37%. The EBITDA has seen a sharp jump up as well of 3 times. Revenue saw a jump up of 27% as well. But when you look at it in terms of just the stock move, nothing exciting given there was a weak market performance coming in as well. The EBITDA margins that expanded to 18.7% for the quarter ended versus September versus the last year when we saw was around 8.3% as well. In terms of looking at the revenues of the company, 27% growth, revenues came in at 260 crores as well. And obviously Just Dial is seeing that overall strong performance. What they are saying is the traffic of unique users in Q2 has grown by 9.7% as well. This is according to their presentation, and coming in at 17.17 crore users for the quarter ended September as well. So yes, keeping an eye out on Just Dial, not a bad set of numbers, but yes, a bit subdued in trade today.
Alright, let's talk about Genus Power then. This one is in focus not on back of earnings but on order win. They've said that the unit has bagged orders worth about $375 million. The stock actually saw an uptick of as much as 5% earlier on in the day, but now given up some of those gains. The order worth in rupee terms was 3,121 crore rupees. And this was for appointing of advanced metering infrastructure service providers. The total order book now for the company stands at around 17,000 crore rupees.
Okay, let's move on to the next one. And Kunal, you've picked out ICICI Lombard for us. What are the charts indicating? What are the levels that you're keeping an eye out on this one?
So on the weekly chart, we can see a perfect curve formation happening on the chart, and that's from Jan 2022 so far. This counter has taken a pause near to 1400 to 1410. In fact, a recent rally in the on the chart, which we can see is almost of around 8 to 9%. The traction is really strong. If the counter manages to cross above 1410, I think this counter can literally show us the levels of 1600 to 1625. So it's a conditional call. Wait for the breakout of 1410. Above that, one can initiate a buy with the stop loss of 1360 with a target of 1600 as a first level.
Right, and that is indeed the last talk in this truncated version of Market Fatafat. Thank you so much, Kunal, Harsh, as well as Ankita for joining us on the show. And with this, viewers, we come to the end of this edition of Market Fatafat. But stay tuned, because coming up next will be a very special discussion with Kunal Rambhia as well as Hemang Jani on what should you do this Dussehra.